Ira Epstein with your weekend edition of your financial market wrap-up for this Friday, the 5th of April, 2019. We're just after 3:30 p.m. Central Daylight Time, and this is approximately where the market's going to finish out for you, all right? You'll be within a point or two of this. They determined the price at 3:15. They stopped trading to 3:30. They just reopened. So just wanted to give you an idea of where you're at. Obviously, today was the important day for non-farms payroll. Those numbers came in stellar. 190 some odd thousand jobs. They revised up last month's, not dramatically. They went from 20,000 to 33,000. Unemployment rate stayed just where it was, 3.8%. So basically, while people will use the word anomaly, whatever it was, but go back to February, you had a lot of problems. You still had the government shut down, other issues. That's got to be part of it. Now, if we start from this number and lose some ground, big ground would be the right word next time, then we have more than just a spike. Something else is going on, that spike down we had. We'll find out. Do we have a Chinese trade deal? No, we don't. That's the other event of the week, but we're getting closer. And in good step, the Chinese have elected, they were supposed to go back to China today. They've elected to stay through the weekend and negotiate. These are all good, positive signs. Doesn't mean the deal's going to be done this weekend. The president thought it could take another month. We'll see if that's the case or not. When you take a look at what the market's done on a monthly area chart of closes only, the highest close we've had is 29.19. You're knocking on the door of the highest close. You're 20 points away from it. That's nothing. When you take a look at where we're at against the old highs in the 29.40 area, you're knocking on the door. What's 50 points in the S&P? Nothing. Some people will say this chart, and I see it that we get on our YouTube page and others, and people write us messages as well, other ways from our website, that this could be an inverted head and shoulder on a closing basis, and they argue that it could also be, if on the bar chart you see right here, where you get the head pointing down, that's somebody's head, a shoulder, and another shoulder. It could be. I can't argue that. What's wrong with me with chart formations is like looking at clouds sometimes. I see it one day, I don't see it the next day. Yeah, I get bullish, so suddenly it's there. I prefer to use the other tools that I've developed over time. And the tool that I like the very best is looking at the market and seeing, is it following a pattern? Bull markets have a tendency to make higher lows and higher highs. You've got it. I don't think most people could have caught this falling knife, bought the market, and held on. I'm not saying people didn't do it. I'd say right here people were wondering, because I went through it with you, what's going on? This market's supposed to rally into year end, and it didn't. And then on Christmas Eve, the market majestically stopped the break. But it's amazing that it's recovered more than almost everything, straight up to new highs. Can you imagine fund managers that are in the wrong sectors of this market? They're scratching their head trying to figure out how do they get in. I know that that's going on because their job as a stockbroker is to beat the averages. I was a stockbroker, so I don't speak as though I didn't do that. I owned a stock firm and did that over the years. I know that game. You're supposed to beat the averages, and it's not the easiest thing in the world. When we take a look at moving averages, the one thing you can see is you've got a traditionally bullish setup. The shortest term moving average, the 18-week, is over the 100. The 100 is over the 200. When the break was going on, you can see how they were coming at each other, and I was wondering, is that going to get a negative cross down if prices break again? And as it turns out, that was just the correction. How it came about to be that one, why at that time, I'll leave other people figure that out. What about resistance in the market? Well, it comes in two levels on the weekly chart. You look back to the highs, obviously, and you say, well, when you're going like this, the only resistance might be the old high we made. We're in the neighborhood. We're visiting it right now if you take a look at the chart. And then the Bollinger Band top. Now this Bollinger Band top is going to jump again. This is a weekly chart. So it went up 25 points last week to this week. It's probably going to jump again another X amount when it reopens Sunday night, probably another 10, 15 points again, which puts it right against that 29.50 high level. There's a difference between the closing prices and the high, but you cannot argue that you're not in a bull market. You're one that's been powerful. What number don't I want to see taken out that would signal that the market may be running out of steam? 27.89.5. Now, mentally, I keep thinking, with the Chinese deal going on and the market not paying attention today, strong attention, at least to the non-farms payroll, are we really discount? It's going to be one of the events where you get the Chinese deal and the market says, well, I've built that in, and the market goes, we'll see over time how that works out, and goes the other way. It is something that you should put into your head. I'm not saying you act on it, but you think ahead. When I'm looking at what momentum's doing, it's just locked in, and it's been that way. It started up, as you can see, in the beginning of January. It hasn't finished. And on weekly charts, I don't look for overbought or oversold. This has just been a market that continues to run. In the NASDAQ, again, you're at the knocking on the doors at these all-time highs. And you can see that you're running the Bollinger Band. You hit it once, you backed away, you're hitting it again. Remember how out of favor the chip sector was? Remember how out of favor the FANG stocks were? Well, everything's coming back with a bang on this market. Interesting. Dow Jones is still the laggard. We know about Boeing. We know the drags that we've seen in different parts of it. And you can see it is developing what we could call that shoulder again. A head, a shoulder, another one. It's possible. The trend is up. Higher lows, higher highs. Momentum is locked in. As I see it on the chart, the next stopping zone, 27,000 area. That's the next Bollinger top, and it'll be a bit higher when they reopen on Sunday night. In the Russell, this is the catch-up part of it. This is the market that has not gone with the other sectors, the small caps. They basically still have the lower low, higher high pattern. Yes, momentum's here. Yes, the market is staying over the 18-week average, but it's not as dynamic a market as the others have been. And in the VIX, the market has still got a pattern of lower highs, lower lows, bearish. The market is still locked in on the downside. You've got a number here of 12.82. People are not worried about the market. If they were worried, you'd have these spikes on the upside. You're not getting it at this point. And the danger is, of course, when a market gets this high, people tend to not want the purpose of what this insurance policy is about. I'm not telling you to do it or not do it. I'm just pointing that out. In the notes market, you got ahead of yourself, got up and over the upper Bollinger Band just 2 weeks ago. It seems like it was forever, doesn't it? When we were talking inverted curve yields and the impact on the economy and the skies falling in. I do my best here to show you what I know over time, and what I know is that is a warning signal. If you don't accept it, that's fine. But it's a lag to it, a big lag. It could be a year to 2 years. So you remember that, now you start wondering what is going on. Another thing today, while the market came down for the week, and it is down 19 ticks for the week roughly, does this good job data do anything to put the Fed back into the game of looking hard at what the economy's doing? We realize the president told the Fed today, or hinted, as did Larry Kudlow, that maybe the Fed should consider interest rate cuts. In other words, take the pressure off, let the economy loose. There's no inflation is the argument. Not arguing with them. I'm not for it either. The Fed should be independent. They'll figure it out. And in looking at the market, all I see is that you got up over that number that I teach, the Bollinger top, and the odds of staying over that are 5% of the time. And the idea here is if you wait, you can probably get in at a better level, and that's all it is. What bothers me, too, is that if you'll notice, momentum's trying to turn down. If it drops from here, what happens is the lower this goes, real rates go back up. We saw this past week all the refinancing on mortgages. They went up rather dramatically because rates have fallen, what, 3/4 of a point? That's a lot. When we take a look at TLT, I'm going to stay with what I do. If I took the name off the chart and you got up to the Bollinger top, I know what I tell people. This is where I think the pros are taking money off the table. So in other words, rates fell low enough that people were playing this inverted, as I like to call it, ETF. You came up in the price and you're backing off. Support way back down here at 121.66. Doesn't mean you have to go to it, but it's not that far away. It's 2% away. That's not far. Momentum here starting to waffle a bit too, acting like it wants to begin the turn down. The red line, if you can see, is they're both in the 70s, and they're just telling you they're high. In the dollar index, when you look at the weekly chart, you realize the frustration of traders in the currencies that are trying to catch a trend that hasn't been there. It still isn't there. You have the higher high, the lower low. You're drifting around this 18-week average of closes. Momentum is to the upside, but the first challenges of upper Bollinger Bands often are met with resistance. You're 50 points away from it with the market at 97 here. As you go to the eurocurrency, it is just the inversion. That's all. It's got lower low, higher high. It too is caught in this basic pattern of trying to figure out what to do next, momentum pointing down. In the British pound, you would think the British pound had fallen apart if you read all these things about Brexit, but there's a beauty of a chart. A chart's telling you this market made its low in December, and it's been coming all the way up, all the way through. Read the newspapers, you would never believe that. Look at this, and I'm not talking financial newspapers, I'm talking the chaos of what Brexit is, people hoarding in businesses, worries about what's going to happen, home prices definitely getting hit, jobs let go there. The currency's saying the economy's doing just fine, it's the other parts. And when I look at the chart, I see the pattern still higher lows. Now, if you took out 130.27, you'd finally get that pattern broken. I'm also looking up here at a rounding top in the market, and you're having your troubles at the 100-day average. Yes, the Bollinger Band has stopped it, but so is the 100. I didn't say day, I did. It's the 100-week moving average of closes that is the resistance. In the Canadian dollar, this is a market that is caught in a pattern with lower highs. It's had lower lows. It went into a pause this week. What do I mean by a pause? You suddenly have the lower highs, but now you got the higher low, and it's all against the 18-week moving average of closes. I think if the market were to get through this last break low, it would give the bears another sense that they've got the market, and maybe you put into play right down here. If the bulls can take out the 75.60 level, they're going to tell the bears, we got you, and maybe we can get up to the upper Bollinger Band. Whenever this happens, you're getting very close to the market trying to make a move one way or the other. And I've seen plenty of these become fake moves. I've been involved in them. I'm like Swiss cheese. If there's something to do wrong in the market, I probably in the 50 years have done it. Wrong. You learn, though. In the Japanese yen, the first thing I see on the weekly chart is no trend. I see a market that's tried the downside, couldn't go anywhere. Tried the upside, couldn't go anywhere. Keeps coming back to these two numbers, the 100-week average and the 18-week, looking for direction. Momentum is still pointing down. Bias is down, but it hasn't been able to follow through. We had that one little bump on the daily charts as everybody got scared with the inversion and drove that up, but it's given all those gains back already. In Bitcoin, when I look at a chart, I said a weekly chart, I got a bottom. The market bottomed out here. It's now trying to break out to the upside. It did what it had to. It formed this narrowness in the chart, and if it can keep pushing on it, this market can build on that. I still do not know what Bitcoin is worth in terms of forget dollar values. What do you use it for is my problem. However, I'm watching the trading volume, and the volume today was 4 or 5 times the size of the open interest. So there's a lot of people that are apparently trading it. It's not big volume. It's under 10,000 contracts the last I looked today. It was about 8,500. Believe me, trade the bonds or anything, you go through that kind of volume in minutes. But at least, you know, the market's doing it. You know, the Board of Trade's contract is shutting down. Not the Board of Trade, the CBOE is shutting down. When you look at Brent, look at the differential here. Suddenly, you'd have thought, like so many other people, I think, that Brent, because they're controlling the oil flow out of OPEC, because Venezuela's got its problems, so on and so forth, that it would be gaining on U.S. Not the case. Now, today, they did put on a lot more oil wells. So we went up, I think, 15 or 16 of them. You can see in the Brent, the market has been gradually working its way up. Momentum's still in play. Could you get to the 72.5 area? It's possible. Support's back at $65, the 100-week average. The stronger market is clearly the WTI. You see it in the spread difference, and you see how it's running against the upper Bollinger Band. It, too, has its momentum to the upside. Remember, read over the weekend about what's going on in Libya, because we could lose more barrels of oil there if a heated exchange. There's already a war in different towns approaching now the capital, and the question is, what happens? I know the UN was there and they left today. Higher lows, higher highs in the gasoline. Are we ever going to get a correction going into the spring? We're up 7 cents this week in the market, and in that gas, the market's in need of a story. Guess what that story will be? Hot weather when it comes around. We're in April already, so you're looking ahead to more warmth. Still in a bear trend, hasn't given that up. Your warning sign would be getting over the high right through here, which was, give it to you right there, 289.70. You know, if you like technical studies, you're going to love these booklets that we've got to you, Guide to Technical Indicators. They're volumes 1 and 2. They came from our good friends at Futures Magazine that's no longer in business. I wish somebody'd pick them up because I love the magazine. In fact, the old editor was just in the office with me, I want to say Friday last week. They came in. But whatever. It talks about all these different parts. It's the best guide that I have found. If I didn't like it as much, I wouldn't tell you about it. I'd look for new ones. I can't find them. These are just the prettiest, the easiest, the best to understand. And they're free. I made them into PDFs for you with their permission, by the way. So give us a call, or better yet, just go to our website. You'll see a carousel of free offers. Click on it, and away you go. I'm Ira Epstein. Have a great weekend.